This is your dose of daily market wisdom with master trader Nick Santiago. Starting from humble beginnings, Nick has been beating the markets for over 2 decades. He shares with you his take on the profitable trades that will have you moving towards financial freedom in no time at all. To see an in-depth review of his track record and much more, go to inthemoneystocks.com.
Welcome. This is your daily dose of daily market wisdom with master trader Nick Santiago. I'm Kerry, Lutz, your host. It's 5/31/23, show 498. So we had a surprise on the Jolts measure, job openings today, didn't we, Nick?
Yes, we did. The April JOLTS number came in at 10.10 million. The prior number, I believe, was 9.59. That was actually revised lower. So this is a pretty hot number, and this puts the Fed in a corner. They simply can't cut interest rates now. I know a lot of market participants are saying, hey, the Fed funds rate is above the 2-year Treasury note yield. They could cut now. They really can't cut now. You're seeing the jobs report is really too hot. Other economic numbers have been hot. And this coming Friday, we're going to get the actual job report from the Bureau of Labor Statistics. Now, I never believed that report. I think that report can be skewed some way, somehow, and it always seems to come in like a Goldilocks type number. But the bottom line is the Fed has not been able to curtail the employment picture. They just have not been able to really slow it down. So we'll see how this plays out. But I really think the best case scenario is that the Fed maybe pauses at the June meeting, which is going to be on June 14th. I just can't see them cutting right now at all.
All right. Well, that'll be interesting to see. The JOLTS number, is it really accurate? Is it like an ADP number for the payrolls? Or, what does it really mean? It just could mean that there's a lot of ads for burger flippers, right? And waitresses and bartenders.
Yeah, it could be. You could always look into how they come up with these numbers, but this report has been something that they've talked about and something that they've tracked for such a long time. So, if the number comes in hot, how do you disregard it? It's not my measure, it's their measure. So, when you look at these reports that they put out and they talk about these, job openings that are available, it's way higher than it was, in April. So, you just have to look at this and say, hey, if this is what you're using to come up with your explanations, you can't say this is not a hot number. It is. And we'll see. I think it puts the Fed in a big corner now.
All right. Well, that's interesting. So the debt ceiling kabuki vote is scheduled for later today.
Yes, we're going to have that vote. I guess the House of Representatives will vote on it this evening, I believe at 8 p.m. So, you have to love this political theater because there's so many Republicans out there right now saying they're going to shoot this thing down. And then, I don't think they let things go to a vote if they don't have the votes, right? So It's kind of interesting. I guess they got about, all afternoon and early evening to get these people flipped.
Yeah, to apply the pressure and the bribes, right?
That's right. Somebody's got to be a little compromised out there.
This is how sausage gets made in Washington, right?
That's 100% true, Kerry.
All right, oil. So oil's below 70.
Yeah, oil's getting pounded again today, down about 1.5%, 1.4%, trading at around 68.50. It broke that psychological $70 level. We've been talking about crude right now pretty much the entire month of May. And if we take out the May lows, which the pivot low is showing me around 63, 64, that occurred, I believe, on the 4th of May. If we take out that level, we're going to probably see a quick move down to $50. I think $50 is a multi-year buying opportunity. But with that being said, oil remains in a weak position right now, and you got to be a little bit careful with it here. It's still holding above the May lows. So that's the positive, but the negative is it's below all the moving averages, really struggling to get a bid. And if it starts to break through that early May low pivot, you're going to see this thing go right down to that $50 level.
Yeah, and that's when you load up the truck.
When everybody hates it, you got to love it, and that's going to be the spot.
All right. What about nat gas? What are we looking at there today?
Yeah, nat gas is in the green today, so it's up about 0.5% as we speak. So that started the day off a little bit weak, but I think nat gas is in the bottoming process. I've said that already on this show. I've traded it multiple times. I'm long nat gas now myself via the UNG, and I love it going forward. You may have to hold on for a while. It's going to be a little bit of a bumpy ride because it's a monthly chart pattern that's in place. But these are the patterns that make money.
Right. Okay. And hey, gold and silver are both trending higher today.
Yeah. So when you look at gold today, it's pretty strong. It's up about 0.5%, and that's acting pretty well. Remember on the program, Kerry, just 2 weeks ago, I said gold on the daily chart would have to test 1940. That's going to be the support level. And here we are back at, tested that level yesterday, and here we are back at 1985. So again, if that level breaks, then we have to look lower. But right now, that support level is holding at this point in time.
Yeah, and now silver is climbing back over $23 the ounce.
Yeah, silver's sitting right around 23.40 right now. Still holding up. We talked about a pierce of that 23 level being daily chart support, so that's still holding as well. Now, if these levels get taken out on both gold and silver, then obviously that could lead to significant downside. But at the moment, daily chart levels are doing the trick, and they're doing their job holding up.
Okay, and finally, Bitcoin.
Yeah, Bitcoin's a bit weak today, down about, as I speak, about 3.9%. So Bitcoin back below 27,000 on Bitcoin futures. The daily chart just looks atrocious. It does not look very good. But the support level lies around 25,000, maybe 25,100, right around there. The weekly chart is still okay, but the longer we put in this bearish base on the daily, the weaker the overall whole structure becomes. And as you know, I'm still expecting, Bitcoin at some point to go revisit 11,000. Now that hasn't happened for a while. We've had a good counter trend bounce, but the bigger pattern is still to the negative side.
All right. Well, that is it for today. Make sure you go over to Nick's site, inthemoneystocks.com, see his trading record and how he's beaten the averages for decades. And the Twitter feeds are at ITMS, at Nick Santiago01, at Kerry Lutz. Emails welcome, KL@kerrylutz.com, and write your comments on the YouTube channel below. Nick, we will talk to you on Friday.
Sounds good, Kerry.